Hey everyone, this is Mike Minter, Chief Investment Officer with Financial Synergies Wealth Advisors, and this is your market in minutes. And we're looking back on last week, September the 18th through the 22nd. This is Monday the 25th, but always good to look back and see what got us here. So let's jump right into it. All right, so last week, unfortunately, not a great week across the board, as you can see. We had all the major indices down pretty substantially, so not great. We'll talk more about why that occurred and kind of some of the events around it. But it is always nice to reflect on the broader picture. So we always like to bring it back to the broader picture. So year to date, still very strong. We knew that things can't just go up without ever pulling back. So year to date, still looking very strong, but it's bound to happen. We have a little bit of a pullback, and September, generally speaking, is a pretty poor month for stock returns. It just tends to be little ho hum, and then we get into October, November, and activity picks up, and hopefully we'll carry through, and it'll be a great outcome towards the end of the year. Okay, so let's talk a little bit about what occurred last week. So as we saw, everything was down, but sentiment kind of took this negative turn. We were kind of caught off guard a little bit by the Fed. I don't know if everybody was caught off guard. It was a little bit of a surprise, I guess. The Fed signaling another potential rate hike. I think a lot of people were prognosticating, if you will, that would be it for the year, and it might be. We simply don't know. But Fed did signal a potential rate hike towards the end of the year. So we'll see if that actually plays out. So obviously stocks declined sharply, and following this, Federal Open Market Committee announcement and Jerome Powell, and bond yields spiked. 10-year actually hit 4.48 on Thursday, which is its highest point in more than 15 years. So that's significant. And then stocks also reacted to this news that the House of Representatives went into recess Thursday, and so now we've got this prospect of a government shutdown. So the sell-off cooled on Friday, only adding a little bit to the week's losses. But this prospect of government shutdown, I'm getting a little numb to it. Honestly, it seems we're dealing with this, constantly, and I don't think we're actually going to shut down. I don't think anybody actually believes that. But so it's this political football, but it does introduce, unfortunately, added volatility in the market. So there you have it in terms of how, what was impacting the stock sell-off. So let's dig into one aspect of it a little bit further. So we talked about these rate hikes. So the Fed did hold rates steady on Wednesday, which is not, that was not surprising. What was surprising, of course, was that they signaled another rate hike. And they also suggested rates may need to remain high through 2024. That doesn't mean there's additional hikes coming. It just means they may not be as aggressive on lowering rates in 24. We'll see. That could change. Those things turn on a dime. But Fed Chair Powell remarked the inflation battle would continue, and that the upcoming economic data would of course, inform the FOMC's future rate hikes. In their economic projections, 12 of 19 Fed officials expect to raise rates one more this year. And again, these things change. The environment and the variables surrounding these things, they tend to change week to week. So who knows where we're going to end up by the end of the year? But that's kind of where they're seeing things now. And I think they're being a little cautious in what they put out to the public right now. And then the FOMC does meet again on October the 31st, Halloween, through November the 1st. All right, so what do we have on deck for this week? So we've got some key economic data here on the left and companies reporting earnings on the right. As you can see, Tuesday, we've got some consumer confidence coming out, new home sales. Wednesday, durable goods orders. Thursday, jobless claims, GDP report. That'll be interesting. Friday, personal income and outlays. And Tuesday, we've got Costco. It's kind of a light earnings week, but Tuesday, we've got Costco. Wednesday, Micron Technology. And Thursday will be interesting with Nike reporting earnings. So we shall see what occurs, and we will report back to you next week, and we'll see what the story is then. So hope you enjoyed your market in minutes and it was helpful and informative. So as always, here's all our contact information. Should you need to get in touch with us, of course, clients, any time, any day. If you are a prospect or anyone just viewing this video that might want to learn more about what we do, please contact us at any of these available options. And then down at the very bottom, that's our YouTube channel. So if you want to go to that and possibly subscribe, you'll get these videos right into your inbox, or it'll send you an alert on your smartphone, or however you get that. And then you can just digest it straight through YouTube and not have to go to the blog if you would rather do that. So anyway, just want to give you that option. Okay, guys, really appreciate your time this morning, and we will see you next week. Thanks.